What's up, guys? Just this week, Robinhood made a decision to literally screw themselves out of millions and millions of dollars. But in today's video, I'm discussing why I'm not ready to get rid of their trading platform yet and why I'm still going to use it at least for the next little bit. Like many of you all that currently use, or now we can say used Robinhood, I was first attracted to them because of their commission-free trades. They literally were the Robinhood of Wall Street, where they ran on the platform, or at least gave the appearance that they were for everyday people, and they were screwing over Wall Street by sticking it to them, forcing major companies that for years have been the norm of charging up to $7 per trade, like Charles Schwab, Fidelity, all these companies, and it forced them to adapt to free trades. And it really, to us, at least to me, it was the champion of the average Joes. But that all seemed to change this week when Robinhood made the costly error to stop allowing people to trade GameStop, AMC, and other companies because of all the shorts going on. I mean, literally, everyone other than Wall Street in the world was pissed off about this. You know it's a big deal when you have Ted Cruz and Donald Trump Jr and AOC coming together and agreeing on the same thing. Every forum on Reddit, every Facebook page, people were pissed off. They were talking about dumping their Robinhood accounts. They was talking about trading their accounts. They was talking about going on the App Store and giving bad reviews, all of which were completely justified in my opinion. But here's my take on it. Robinhood wasn't the only trading platform that did this. WeBull is just as guilty. Of course, Robinhood, you had Charles Schwab, you had Fidelity, TD Ameritrade. They was either stopping or putting restrictions on certain trades. And really, to me, all of the trading platforms were in conjunction or cohorts on preventing this from happening. In my opinion, Robinhood is like any other company. They have investors. And if you think this was the sole decision of the CEO calling the shots, I think you're wrong. I think that's not the case. I think if Robinhood continues to go on with their IPO process, you're going to see, if they go public and they release all their financials, you're going to see a lot of their investors are tied into Wall Street or tied into these hedge fund guys that were calling these shots and really forced them because they didn't want to lose billions of dollars. I think they're all in conjunction. And unfortunately, I think that Robinhood did probably sell its soul to the investors because they had to. Now, if you're one of those people that is currently leaving Robinhood, or if you have already left Robinhood, I don't blame you one bit at all. I really consider doing it myself. To me, that's what the beauty of the free market provides us, is the ability to pick and choose. If we don't like a particular product, a particular company, a particular service, we can leave and try a different company and allow people to realize that every decision, whether good or bad, has a consequence. However, for me, I'm not too quick to jump ship and really make a abrupt decision within a week span on this. I get they made a costly error and they're going to have some serious repercussions from that decision they made. But I'm somewhat loyal to Robinhood because they were one of the pioneers that really stuck it to Wall Street and allowed me and millions of other people become everyday investors and really have the knowledge of the stock market at our fingertips in a simple and realistic terms. So for me, of course, I could be making a bad decision. I do have a TD Ameritrade account that I've had for a long time. Robinhood is an account that I pretty much use every day for my daily trades because it was easy. It didn't have a lot of data or analytics provided with it, but it was an easy way to pull up on your phone, make a quick trade, do my options, and move on. However, I think that after all this settles down in the next couple of weeks, I think you're going to see some benefits from this. I think Robinhood is going to obviously go into damage control. They're going to reassess how many accounts they lost, how many customers they lost. And I think this is a good way for them to offer better interest rates. I think it's a way for them to offer better packages such as Robinhood Gold. It may be free, it may be cheaper. I think they may increase their margin limits. All these things are going to play into factors because they have to make a quick decision that's going to save the core of the company if they plan on being successful, and especially if they plan on going on with their IPO process. Which leads me to my next point. As an investor, I was excited about Robinhood's IPO as something, as a consumer, I was interested to see what the target price was. Of course, they had the speculation of the valuation the company may be valued at. So if anything, I think if they continue to go on with the IPO process, it's definitely going to drive that target price down, which benefits overall investors like you and I if we want to buy into them as an investor. All I'm saying is sometimes, just like we do in the stock market, you have to hold on, have a little patience, and see how everything plays out, because some things may not be as bad as it seems. Now, if you're one of those people that has left Robinhood, or if you're currently planning on leaving Robinhood, I would love to see in the comment section which trading platform you're going to, and really how easy the process it was to trade your stocks from Robinhood to, say, like WeBull, M1 Finance, or whatever platform you're going to. And if anything, it may help someone else make a decision if they're going to stick with Robinhood, or if the transition is very easy. That's it for me today, guys. Thanks for supporting the channel. As Adam always says, I hope your stocks stay green, stay safe, and we'll see you on the next video.